Hi, JB Cycles here. Update on June the 18th. I think things start to look a bit complicated, but let me share my thoughts and maybe I will get something right in the coming weeks. Lately we have seen the S&P is not correlating well with my 4-week cycle, and this cycle has been working very fine for several years now, but now and then it has periods where it doesn't work that well, and sometimes the cycle changes. The cycle length is the same, but the market has a different behavior. Perhaps it shifts or say inverts or something, and then it stays in this new position for another several years. This cycle is a sentiment cycle, so I have been kind of prepared that the cycle would break down, because when the market starts to crack, sentiment is perhaps not the dominant factor anymore, but you have margin calls and other things. People may be bullish, but they have no cash to put in the market, but rather a bank coming with margin calls. So that could be what we are experiencing now, but I still hope that this cycle will become dominant again. So I'm still expecting a low early July, and I think we should see some kind of bounce soon and another low, and we are very close to my target area around 3,600. So this may be a major low we are at. I've shown this one earlier. Here is the major moving average, the 3.5-year moving average, and we are very close. This is a typical low for a bear market in an overall bullish market, and we have not broken below this average now for since the 2008 bear market. So this is a possible bear market low, and we may break a bit below it, but here we should expect a bigger rally, and it could go up to the 200-day moving average around 4,200 later this summer. So I've been looking for these two strong down moves, one here and one here, and this momentum indicator I have built here in red often shows a lower low in momentum here, so we are still not there. Could go lower. I have these pattern recognitions I've been looking at, and this is a very small group of analogs to analyze on, so I would rather prefer to have at least 20 examples, and with these few it's hard to trust what they tell me, but we see well, the pattern is pointing down. This ABC was perhaps this one, but we have an early top, and that could mean an early low. But we see here is that the downside momentum is increasing, and we have one example here, the 2000 example in blue. From this low to this low we have a trend line, and we see we break below and make a kind of a double low here, and that could be what I'm expecting here. We look in black here. We have increased selling momentum, and we could see some kind of a double low here with the final low early July. I have so many charts here. We have the VIX cycle or oscillation. This still favors a couple more weeks with the rising or high VIX, which should be bearish for the market. We have the overall bigger cycle, the 3.5 or 7-year cycle, and the cycle is still very bearish for another 12 months, but some bear markets actually made their low at this point. So it's possible that the bear market could soon be over, but I don't expect that. But it's possible, and that should could produce a bigger summer relief rally here. If we zoom in at the cycle, we see the cycle is not that bearish anymore. The correlation going back, we correlated well here, we had the bounce here, the low here, and the bigger bounce in sync with the cycle, but here we started to differ from the cycle. Market going down, cycle pointing up, and here the cycle going down, but we had the bounce, but here we're back in sync with the cycle, but we could see some kind of bounce here, and the cycle starts to get really bearish in late August. So let's see, what do I have here? If you look at Norway, there are still no bearish confirmations in Norway, but we are very close to be getting them. I was expecting a lower shoulder here, but we had a double top, and we see we are still in this rising trend channel, and if we break below here, we'll start to get these bearish confirmations. But still, raging bull market in Norway, and that's because of oil and energy. But as I showed earlier sometime, the oil price is often or normally a lagging index. The leading index is the oil service sector, and that is leading the oil companies, and the last one is the oil price. So we see oil sector major weakness, a lower low. The XLE big weakness, testing a low, and the oil price finally giving in. So that should influence Norway, and we should see a breakdown in Norway, and probably a bit more weakness in energy. Perhaps some kind of a sector rotation now the coming weeks, energy being weak, other sectors being oversold and going up. So overall, maybe the S&P will go sideways around the level 3,600, while Norway will finally break down. Yeah, it's a bit unclear how this will play out, but still looking for a low early July. And are we very oversold now? If we look at the number of days below 50 MA, we are far away from being very oversold. We could still have months below 50 MA before we break above. But I favor a low early July and a rally into mid-August before we crack down. See you in the next one.